Thank you, everyone who's here listening. Before we start, full disclaimer. We are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help. Also, due to the content of the show, this is for mature audience only. Welcome to the Hustle, the Struggle Investment Podcast, where two regular guys not from Wall Street come together and simply talk stocks and investments. We're here to give you the raw and uncut stories of an everyday trader. Tune in and zone out. Let's talk money. Yo, what's up, everybody? This is another episode of the Hustle, the Struggle Investment Podcast. This is the host, Herbert, and main man.
Yeah, this is Dave.
Thanks for tuning in. We have an exceptional episode 7, where we talk about the market downturn. But before we get into the episode, just want to do a couple of shameless plugs. We're now on social media. We're on Instagram, Twitter, and YouTube. And please make sure you follow us at the Hustle, the Struggle Investment Podcast. And make sure you search, because all of our handles are a little different. So it's not like every single handle is uniform. So you have to explicitly go into the search bar and type in the Hustle, the Struggle. Or if that doesn't work, type in the Hustle, the Struggle Investment Podcast. But let's get right into it. I'm pretty sure this episode is going to come out later than the date that we're recording. The date that we're recording is March 28th. But right now we're going through a dramatic downturn into the market. Of course, there's market corrections. What that means is that the price and the value of the stock has to reconfigure and correct itself, as we went through a heavy inflation and mass overvaluation in stock shares coming from 2020. And as an investor, you all can probably agree that the market did not correlate with reality. We had massive protests. Then we had COVID, the shutdown, that drastic drop in the market back in March. It was just a lot of hysteria. I mean, even the March in Capital with that transition from 2020 to 2021. So there was a lot of things that you would think that would conflict with the stock market. But by surprise, the stock market was still hitting records. So I think that's obvious that there was some obscurity into the market. And I'm not really surprised that we're in this downturn. But the only thing is how long and how to deal with it. So, let's lead right into the topic. So, Dave, this economical downturn, how do you feel about it? It got me pretty distraught.
Yeah, I feel really sad about all the people who are on margin,
Well,
present company included, and everyone out there. And just generally anyone who is expecting to spend some cash right now.
Yeah, I'm in that situation. I'm actually investing in margin, so I'm pretty far down. I haven't panicked yet, but I don't know. I don't want to be pessimistic. I was expecting this. It's just I don't think I prepared myself as I should. So I know we've always talked about that investment group that we're in, that the WhatsApp group.
Yeah.
And I was the one that was like, protect your assets, protect your gains, do stop losses, prepare. We're going to have economical downturn.
Yeah.
So I did that. Yeah. I did that on a lot of my heavy gain securities.
Okay.
But what happened was maybe right before the drastic correction, I bought a lot of like low value stock, a lot of like progressive stocks that I can see having momentum. Yeah. Let's say in the next like 3 to 5 years. So I know we talked about EV. I really got into like some of the progressive companies, some of the new competitors of Tesla, and invested in a lot of that. So my problem was I did everything right as far as doing stop loss and protecting my gains. But instead of just waiting and holding the money for a while, I just right away reinvested. And with my new investments, that's where I'm hurting. So yeah, and of course the new investments was on margin, and margin, yes, effing me up. Oh, and we should hear about that. Yeah, for new listeners or listeners that don't know what a margin is. So what a margin is when whatever financial institution or whatever your brokerage account is under, they loan you a sum of money to kind of give you that extra push to make investments. So let's say if you want to buy, I don't know what's
Tesla.
Tesla. I just hate, we keep bringing up Tesla.
Oh, do
we
we?
bring up Tesla a lot. But no, we can use them. Forget it. We use them. But yeah.
GameStop.
There you go. Yeah. So let's say if you want to buy GameStop and it's like $50 a share. And let's say you only have like maybe $1,500. So obviously you only can buy $1,500 worth of that GameStop. But with the margin, you have like a loan set of money. Sometimes it may match that or it might be a little bit above. So now you have relatively like $3,000 or $4,000 that you can invest. But once you buy that share in GameStop, it is under margin. So that money is loaned and the money is not returned until you trigger that sale. But the fortunate thing is, as long as you gain, you keep the gains, but you still return the margin money back into that account, if that makes sense.
And you pay interest on the...
Oh, yeah, you pay interest for sure.
Yeah, that's the big part. I consider, I don't know, just margin to be like a loan shark, folks. That's how I view it.
No, for sure. But there's a technique though. One thing that I can suggest is if you do trade in margin and you have a diversified portfolio, to actually avoid the interest, because you're right, you do pay interest, is just try to focus or pay attention to high dividend securities.
Yeah.
So if you have securities,
just make money, right? It's simple.
Yeah.
Just stay in the green. Like I see the use, and I mean, I guess people just want to get more out of their investment or invest more. But, I think this market downturn clearly showed, and every time this kind of does happen to some degree, the reason why we always talk about all these kind of worst case scenarios.
Yeah. Yeah. Yeah, but the margin part, yeah, you're right, because I'm pretty effed on the margin, and I'm paying high interest. Oh, but that's what I wanted to say. One of the strategies with the margin is if you focus on high dividend securities, then when you get paid that dividend every quarter, then sometimes it can even out. But it depends on how much you're investing. If you're investing in high margin, then obviously you're gonna have a high interest. But yeah, just wanted to throw that in.
Anytime you borrow money in these days, the interest rates are, you think about credit cards, line of credits, that kind of thing. As someone who's probably not an expert, who is definitely not an expert on this, but I always feel that, you got to pay attention to these things. They really build up over time.
Yeah.
I remember you talking about in the chat group, be prepared before, and here we are in it. And I did a little bit of downsizing, or liquidating, but, once again, here I am kicking myself for not listening to or not reading the writing on the wall.
Yeah.
Why does that happen all the time?
Yeah, I mean, and see, that's the funky thing about the market, that it's unpredictable, obviously. I mean, it can definitely get worse and it can get better. Yeah. I don't think anyone can relatively just time the market unless you're just one of those people that's controlling the motherboard, if that even exists,
Yeah. And I think you can't control it or really tell. But one thing is, nothing good lasts forever, in terms of market.
Absolutely.
You're right. During COVID, even before that, a lot of things were going on, but the markets were doing good. So there's a lot of reason to believe that it can continue weathering the storm. What's happening in society, but not happening in the marketplace. Total disparity. But yeah, one thing maybe I'll take from this lesson moving forward is when I start seeing that disparity happening again, even if the market is good, time to pull out.
Yeah, I think that's a lesson for all of us. Well, it's still hard too, because even pulling out, you still don't know when to come back in.
Don't want the baby.
Yeah. I mean, even some of the advice.
Debt baby.
Well, I was gonna
debt.
Oh,
baby.
Debt's baby. Yeah. But I was gonna say, even some of the advice that I got, just in investing is that you're young. We're relatively young. And, if you have an aggressive portfolio, any downturn in the market, you kind of just want to hold, wait for it to recover. Because you're young, you have plenty of time.
What kind of lesson does that send to people, though? I've heard that so many times. I remember investing in mutual funds when I was like, wow, even before I was 18, I guess. And they're saying, oh, you're young, you can be risky. But then as I got older, I'm like, am I just going to keep on ignoring things? Like, is that the best advice they're going to give me? You're young. And I don't feel like I'm young anymore. But they're like, yeah, you're young. You can, and just by looking at me, mind you, you're young. You can, if it goes down, just weather it out. And now as I'm getting older, it's like, why am I just weathering it out? Should I try to learn from this? Should I be better prepared? Like, I feel like I'm in Florida knowing there's a hurricane going to come. I still feel after this.
Yeah, I mean, well, what I took from that, and I think I might have said this in one of the prior episodes, when you start investing, you have to have money to invest.
Yeah.
If you're a rookie investor or if you're someone with no end goal or just a desire to make money, people tend to invest the money that they need.
Yeah.
So when I got the advice that, you're young, just ride the wave, go through the storm until, it fixes itself. What I take that as is that that's money that you just pretty much keep invested, that you don't touch and just wait, consider the long term. And I've always stressed that even if you have short-term expectations, you have to come in there expecting long term, period. Just by default. Things should always be long term, and that's because the market is unpredictable.
That's true. You should be able to weather the storm for sure.
Yeah. So fortunately for me,
that's a good point.
The money that I have in my account, I don't need that money. The only problem or the desperation in my situation is because it's in margin. So I am still paying interest, and if it goes lower and then I miss that tipping point, then my account could be effective, which it's called a call. I can't really explain what a call is because I've never been in a call, but I think a call is basically when someone from the institution or whatever institution that you have your account under, they'll call you and say, hey, you've kind of went below the margin amount, which you're in the negative. So we have to start liquidating.
Yeah.
And the problem with the call is not necessarily a bad thing. It's just that they're going to force trades on securities that you probably want to hold on to and not trade. You're not prepared.
Yeah.
So it's just an immediate reaction. And then depending on how far it drops, the worst case scenario is you're going to have to liquidate all like your entire portfolio. And that's when people lose everything. And that's, I think, some of the detriment of margin.
Yeah.
And I forgot to mention too, in some institutions, you have to do your research. I don't know if this is just a borderline universal minimum, but I know the account that I'm under, you have to have at least 25,000 to trade margin.
Yeah, that's right.
Yeah, I think. Oh no, you know what? I'm not sure.
I mean, it may vary, but yeah, there's a certain amount. You just can't just open up an account with no money or little money and just
right.
If you're approved for a margin account, all that kind of stuff.
Yeah, the only thing is, I'm not sure if it's for day trades or margin. I forget the amount because I think I might have that 25,000 mistaken for day trades. If you have at least 25,000 in the account, then you're able to day trade. If you're not, then you have to hold it for 24 hours before you can trigger trade or.
Okay, yeah.
So, or you'll be in some violation.
I actually know a little bit about this one because I set up a margin account. I've been using it a little bit, but I actually never really utilized the margin aspect or the loaning aspect of it. What I wanted to do was just because when you're in a normal brokerage account, you got to wait for it to clear. It takes a couple of days.
Yeah.
So I wanted to be able to do my trades quicker. I honestly did not know much at this point. And this is just a couple of years ago. I never really did anything, exotic in terms of trading.
Yeah.
So anyways, I was actually working on a kind of a personal stock trading monitoring application. And I was just kind of working it through. And I did like 5 trades in one day. So according to a margin account, at least the one I have, is that if you go beyond 4 or 5 trades in a week, which I thought was really low, you, in a margin account, and even I think in a broker account for that matter, you essentially get elevated to another level. It's called pattern trading. I presume that's what the high frequency traders do. At that point, it's kind of automated or whatever.
Yeah.
Or people help. So that's where I had to scale it back into a margin account, and I'm only allowed to do that once in a lifetime. Like, who keeps track of this stuff? So there's some real, be a little careful when you set up these kind of accounts. Read, the requirements, because then I think the real trouble here is you go into these kind of categories where you start having filing, requirements, reporting requirements, all that kind of stuff. And if you don't do that, there's real laws against it.
Dude, I'm in that situation already, man.
Oh.
Yeah.
Paperwork, prison.
I mean, the rule of thumb to me is it takes money to make money. And you start off small, your risk is low, then there's low responsibility. But the more risk you take and more of the reward, the more responsibility that come after. And what's funny is I invested in oil last year for the first time. And all of a sudden, like, I have Schedule Ks to report with taxes. And we have to remember, we have to do an episode just purely on investment taxes. I'm literally learning this stuff right now. But yeah, I have these Schedule Ks that I have to report where it's like I'm a partner LLC under some of these U.S. Oil firms. And man, it's wicked. Like, you have to report the price that you bought it at, report the amount of units that you bought, and then your gains.
Dude, through your online brokerage, they should have those forms available for you. You're right. You do have to report that. 1099.
No, but no, they're not 1099s. They're just Schedule Ks. They're separate forms.
Schedule Ks.
Yeah.
But you're not...
I forget what I don't know. It's like Form 6823. I'm just randomly saying numbers, but it's not a 1099.
Interesting. Oh, okay. You're not a majority shareholder, though.
No. I would be considered a domestic partner of an oil LLC.
Offshore?
I'm not sure. I need
Foreign
the form.
trust, maybe?
No, I need the form in front of me. I forget.
Yeah, okay. Anyways...
No, it's not offshore. It's here in the U.S. They're U.S.-based oil companies.
U.S.-based, headquartered in Cayman Islands.
Well, one of them is in Walnut Creek.
Okay.
Yeah.
There's a refinery out there, I guess, or in that direction. Okay, interesting. Anyways, maybe get back to our topic.
Oh, yeah, the economical downturn.
You're right, that is a kind of a topic on its own.
Yeah, no, for sure. And I think that's going to be a very important episode.
Let me say this for the folks that are listening. Congratulations, you've stumbled upon something amazing, I think, hopefully. Anyways, if you're out there, go on our Twitter, our YouTube channel. I'm still trying to remember which ones we got set up.
And Instagram,
and leave a comment about what. Let me ask you this: how you managed to handle this recent downturn, and how long do you think it's going to last? Actually, I kind of want to know how long from you. We'll take a look into our crystal ball that we have handy right here in our secret lair. Just your thoughts on that.
Yeah. I would love to hear some of the feedback. But yeah, I think I talked about just what I'm going through in margin. Mm-hmm. Is there any like real heavy effects that you have with this downturn?
It's kind of it's not the first downturn, right? I mean, there was the recession 2007, and some correction stuff. Not really, because like you mentioned before, don't invest money you're not prepared to lose. We talked about that.
Mm-hmm.
And I know personally, when we've ever started, I think that's probably the first things we even mentioned when we even, between me and you, even started talking about investing. I know I shared that with a lot of people. And I'm not relying on the income from this. So it's just a real secondary activity. So I'm not doing too bad. I'm bummed out. I'm losing money.
Yeah.
I see it coming back a little bit. It kind of gave me a chance to think like, I used to have what I thought a good core set of rules when I'm trading. And then this was, once again, I seem to have quite a bit of these days, as a reminder why I need to stick to my core rules. So I started buying some things. Mm-hmm. We have a couple of people on our channel, or we have a group of friends that we talk. trading quite a while now, about a year or so. And from Yao, I indulged a bit, and I bought it, and it was doing good, by all means. And I decided to kind of, hold out for a little, ride the wave, the tough times out. Whoa, those tough times were nothing in comparison to what they are now. But that's living in the moment.
Yeah. Actually, you mentioned a good point too, and I wanted to point that out because I know, like I don't know if there's a term for like piggybacking, but like you buy a stock that someone else is confident in, and I never recommend that, only because I think people approach may be different, people intent is different.
Yeah.
And of course, I mean, we all want to make money, but it's like whatever numbers or charts that he's looking at and what he interprets, or she, could be different than what what you're walking into. Because I did that with Nelson a few times. Nelson had mentioned something, and I told you about that, and I just gave that up. Like, I don't do that at all. Like Yao and them, they're always mentioning, stocks, and I just kind of ignore it.
Okay.
Like I did. And I just and I wanted to point that out for listeners who invest. And let's say if they're in the same situation, they have a group of friends and they're pulling each other, like backing each other up. Like me, I'm just not that type of investor.
Yeah.
Like, let's say if you recommend something and I find it interesting, I still would go out and do the research and interpret the results in my way. And when I buy that, I have to make sure that this is something that I want, not because it's talked about, and it's some trendy or hot buy.
Yeah.
But
the stuff Yao suggested did go up, but then the market took it down. And it just reminded me, like, I've always had this core value: don't get too greedy,
Yeah.
And don't try to push it too far. And it would have been a great time to really have stuck to it. It would have been an awesome time and I could have really had something else to talk about on the show, like instead of saying, oh, I shoulda, woulda, coulda, isn't life just full of shoulda, woulda, couldas? Be like, I did it and it was worth it.
Yeah. I mean, I feel like on a positive note about the downturn, it's character building.
Oh yeah, for sure.
Yeah. I mean, you learn a lot about yourself, your intent, your integrity into the market. And then you have an understanding of what risk really is. Like when you first open up an account, you always see that disclaimer. It's like, keep in mind that this is a risk, investment. We're not responsible of any losses and blah, 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 blah. And I know, like, being optimistic, you walk in and it's like, well, what could be the risk? Well, the risk is you can lose everything.
Yeah. And more, even more than you even had. Yeah.
And when you're in these economical downturns, obviously that reality comes to light. But I think that, again, with character building, the strong will survive, the weak will perish. So it should motivate you just to learn more about the market, actually be able to take more risk and be more strategic. Yeah, I think, with this downturn, we all should really be taking time, understanding the longevity of downturns, understanding some of the probability of the expectancy of this happening, being more aware of like real life occurrences that could affect the market. Because obviously reality doesn't reflect the stock market. And that's one thing that I've learned in 2020 with all this chaos that we saw in the United States. Yeah. And then the market still breaking records. Then obviously you can't sit here and say, well, just because someone sued Tesla, using Tesla as an example again, but because Tesla's going through a lawsuit, the value of the shares are going to go down. Like that's not always the case. Sometimes, sometimes it is linked and other times it's not. But instead of just giving up and getting afraid, take this time to really, really understand more. And then you think to yourself what you could have done differently. And being prepared to leave the market when it's necessary. Because you said that earlier. Like, I wish I would have just left, pulled my money out.
Yeah.
And that's
more than happy to buy in now.
Yeah. And I think a lot of people make that mistake and not do it because you said it, the woulda, coulda, shoulda, and then FOMO.
Yeah.
It's like, man, if I pull out now, I might miss out potentially what I could gain.
Yeah.
And I can admit I was at fault to that That's why I didn't really wait as I should. Again, I did everything right with my stop losses. I've collected all my gains, but I immediately reinvested when I should have waited.
Yeah.
So
that's a good point. I hope people do, like, anytime we have these kind of downturns and kind of bad events, that people do take something out of that they can, use again in the future. And learn a good lesson. If anything, you might have lost money, but hopefully you learn something valuable.
Yeah.
In it instead.
Yeah. But yeah, listeners out there, as Dave said earlier, we would love to get some feedback and comments. Like, how do you feel? How long this downturn is? Even some strategies. Just
Does anyone have a downturn strategy? And what starts all that? Like, what's the warning signs?
Yeah.
Of course, we're always interested. I know if this were a popular show, I'm sure we would get a lot of charts.
Oh man,
and those red and green circles around the parts of those candlestick charts. They're like right there, right here.
Yeah,
a couple of arrows pointing at it.
Yeah. Oh yeah, I'm glad you mentioned that too. Reading the charts. I mean, that has nothing to do with economical downturn, but I just think that's really, really important. Like, don't ever just pay attention just to a line graph, but the candlestick says a lot. Paying attention to, like,
the candlesticks are the volumes, right?
Yeah,
it's a combination of price and volume.
Exactly.
Yeah. Okay.
But it's all like ratios, some form of statistic, and then probability. Like when you look at the weekly high in correlation to the month.
That's running. It's a 52-week high, which is it's a 1 year. 52 weeks is 1 year.
Yeah, but the fluctuation of volume, like if it's something that's, you have like an aggressive gain or you have a mild gain, something that's trickling.
Yeah.
Because I learned that actually with Bitcoin, there was like a ratio that I figured out. Because remember, I kept sending those screenshots when I was making like $1,000 in one day. Yeah, it was just it was learning how to read the anomaly, like
the anomaly.
Figure out the probability when you would get that, when it gets that jump. But I mean, in any downturn, I just think this opens up a high level of education. I know the easiest thing to say is like, well, in this downturn, you should buy more because the stocks are low value. But even besides that, like, there should be an opportunity to just learn what the downturn is, the effects, the reason why, and so forth.
Yeah. There's even opportunities now. So even in this downturn, there are opportunities. So, even though things aren't going your way, I think it'd be nice, if you can spot an opportunity.
Yeah.
And then act upon it.
Yeah. So my question would be, in this downturn, what do you think it's appropriate to trade? That may be a hard one because that requires research. I know oil has had a good week.
Oh, what to trade? Yeah.
Yeah. And the reason I asked that because I haven't done it yet, but just diversifying my portfolio. I think I'm going to get more into ETFs, but like Vanguard ETFs, something that's really
dilute. You're going to try to.
Well, no, just things that's associated more into the S&P.
Okay. Yeah, I think during downturn, it's important not to focus on this moment of downturn. Try to think about what's going to how long is this downturn? Do you think it's going to last? And I think to answer that question, you need to understand why this downturn happened.
Yeah.
I know people are talking lately, about the Suez Canal and this boat that's blocking it. And of course, that's going to affect the market. But I don't know if that's going to have, I guess it depends on how long it goes. But I don't think it's going to have like huge impacts, So
yeah, that's
not a long-term downturn. And then once you know how long your downturn is, I guess, once you know or have once you've decided when you think the downturn is going to end, that's when you got to think, I think you should think about what you should invest in. So obviously this downturn stocks are cheaper.
Yeah.
The question is, hey, if you have some money, which ones should you buy?
Yeah.
And in order to decide that, I think it helps to know how long this downturn and how it happened, and then see what stocks are more likely to have a rebound.
Yeah. Yeah, I think...
but then again, you need cash in hand. So, you need to be able to be downturn ready.
That's true. Yeah, that goes back. That's why you have to be willing. You have to invest money you're willing to lose. It's not money that you need. Don't invest money that you need.
At the end of the day, you can just lose it all. Yeah.
Yeah. But I think I need to do more research on that, because I guess what I'm trying to ask is what would be appropriate, like moving your money more into like bonds, send them in a gold, just kind of changing the industry. That's kind of what I meant in the question. What would be appropriate? Like, that's what I was thinking of going into ETFs. And you were talking and I was looking at my phone. But I just wanted to say for the viewers that ETFs are exchange traded funds, and they're closely related to mutual funds.
They're a fund. They're made up of a lot of individual.
Yeah. But I think ETF is solo security, where a mutual fund is it's a conglomerate of securities that's managed by a manager. But I just wanted to throw that out to what people know what an ETF mutual fund is. I mean, these are for like new investors or people that's interested in investing, but they don't know these terms. But yeah, I was just thinking in the downturn, it'd probably be safe for an ETF.
Well, I don't know, man. I'm like, I don't know. Where's a safe place? I mean, people say gold or something, but I don't really feel that way. Maybe it did well. I'm not really paying attention, but
yeah. I never traded forensic too, but you even have that. Forensic, I think, is trading currency, right?
Oh, Forex,
not forensic. Forensic. Forex trading. That's.
I've always looked at that, and I've only looked at that when I'm traveling, obviously, because I'm always exchanging money. But that's kind of those are the people carrying around a briefcase full of money in this world. These people, literally.
Those are people you hear in the news, like they're in the office one day, then they disappeared all of a sudden.
Look. In an economic downturn, don't turn toward money. Go work on your own personal relationships, investment, time, health.
Yeah.
I guess during this downturn, I decided not to pay too much attention to the stocks. And in a way, I had no choice, because I pretty much don't have much cash to invest. Mm-hmm. Kind of did the run up with everyone, with all of us, and in the height of it, bought everything, and now kind of regretting it. Mm-hmm. I just this time I'm gonna try to be more patient. I'm gonna ride it out. Mm-hmm. I do remember back in 2007, big recession, and I bought a couple of stocks post recession. Mm-hmm. Only kept it for like a year. Really should have kept it for 10. Mm-hmm. Right?
Yeah.
So I'm hoping this downturn, although I might not have much to say about the downturn, I'm really hoping for the post or the recovery.
Yeah.
So I don't have much cash now. I'm kind of in a bad position, honestly. I don't have cash to spend. Mm-hmm. Things are already tied up. And then there was a post-COVID, and then there's this other, and the market was doing good during COVID, so that wasn't, and then this one
great.
happened.
That's the strange thing about it.
Yeah, now it hit the downturn. So it delayed or compounded, I don't know. Mm-hmm. But I'm hoping, when the recovery happens, I'm hoping my little bread basket of goodies, my goodie bag, I guess, actually has fruit to bear. Money fruit, big fat wads of money fruit. I don't know.
Yeah, that's something to speculate.
Yeah, right.
Like, are you optimistic or pessimistic moving forth in the next 3 months or into the next quarter?
Yeah, what I'm really hoping, so kind of, I know we're talking about this downturn, but I'm really hoping this post-pandemic recovery, the booming 20s, the booming 22s or 21s, but, I think the economy will kind of be back in full swing. My only question is, how long is it going to last? I really feel like things nowadays really don't last.
Yeah.
I swear if like World War II just ended today, the parade would only be 4 hours long and everyone go home.
Yeah, I mean, it goes back to what I said. It's unpredictable. And then that makes me think, how long is an upturn into the market?
Yeah.
That's why I say this is an opportunity to kind of dive in. And when I say this is an opportunity, it's more of like me venting to myself. Like, I'm pretty sure I'm going to listen back to this episode and I'm like, I'm actually going to research this stuff, look this stuff up. Seriously. Yeah, like is it a longer downturn in the market than it is an upturn?
Yeah.
Or let's say it appropriately. Is the market more bear than it is bull?
Yeah.
Because spectators say that we're still in the bull market, even with this price correction, as drastically as the shares has dropped.
Yeah, there's something to be said about that.
Yeah.
I've been thinking about these kind of things, and not so much the bear bull, but these record markets. It's like once you hit a record, then every day you're generally going up, you're hitting the record.
Yeah, and that's what I'm afraid of, because
what's so special about that?
Well, that's
even if it is higher than the day before.
That's why I feel like this is a very complicated question, because you're right, the record part. And when you're talking about records, you're talking about like from millions to trillions of dollars. So that would make me question, where's the threshold? You know, you keep breaking one record after the next. You keep outperforming. Where's the threshold, you know?
Yeah.
What's beyond a trillion at this point?
Yeah, I mean, eventually, it's one of those questions no one really knows, but once it happens, you know, it's like a car running out of gas. Just, you're running on empty.
Yeah.
It says empty, but you don't really know how much further you can go, and then it just cuts out.
Well, like, for example, a lot of these blue chip, tech companies, when they have like their expected profit, like 9.5 billion, they expect to pull in. Like, that's a large number. Yeah. But it's obvious doable in today's market, which we can say it's a bull market, right? So we break another record, let's say in the next 5 to 10 years, we super exceed $1 billion. And then the average number that a company have to pump out is in the trillions at this point. So it's like the market constantly inflates, which is not always a bad thing, but it goes to where's the threshold. That's why I have to question, like, how long is a bear?
Yeah. I don't know.
I mean, we'll need someone that's very analytical and like professional. We're definitely not certified to even give any opinion to this. It's good to ask the question, but I don't think we can answer it.
Well, I'm going to try answering it, because I don't really, like, when I listen to these so-called experts, I just don't find their answers that convincing. First of all, I think the market is strong because there's COVID, and COVID isn't necessarily it impacts economies and finances, financial institutions and economies, but in itself is not financial. So it's not like a credit crunch or loss of capital. Yeah, it's people getting sick. So in a sense, it plays a big role on it, but it's not going to play a big role as in some of these. Well, I mean, it may play even a bigger role, but there's more structural things like trade, and stuff that were going on even before the overnight repo market, the funding, for the economy, and jobs and market job growth.
Yeah, I was going to say...
money circulation in general.
You're right. It's not COVID that actually hurt the market. It's the lockdowns. Yeah. Yeah, it's actually the effect of flowing capital. Yeah. With less population, less workers, people working remote. Yeah. Obviously, it's those sentiments. But...
So, yeah. Yeah. I think post-COVID, there's going to be a bump, but once, like I said, I kind of want to know. I don't think it's going to be as long as I think it will be. Maybe a couple months, depending on how things line up. But a couple months, and then other issues will take over, like China-U.S. trade deal, own internal domestic, issues, and then the financial economic fallout from COVID after the parting's over, the long-term, more silent effects.
Yeah. Yeah, that's actually a topic for a future episode, politics in the market. But yeah, you mentioned like the trade.
I do expect another downturn to happen because these things are more hinged on like financial things, and now in a modern sense are global.
Yeah.
So now, just because you have more, you have more players contributing to the global market, but when one or two of these players there's more of them now, drop out, they may actually pose a bigger impact.
Yeah.
Because 8 other people were relying on them, whereas it was maybe just one.
Yeah, and I keep forgetting too that Europe, they're in a lockdown. They had to iterate another lockdown.
Paris, in what is this, March 28th? Yeah, they just entered a month-long lockdown. So did India, but.
Yeah, so all of that stuff affects it. That's why I'm glad you mentioned the whole China trade in the U.S. But yes, politics, and then I agree with you. I do expect
Biden has the same politics, so I don't expect things to get better. Well,
I was gonna say I do expect another downturn. It may not even be political, but just because of the stimulus, like you have to think about all the other nations that have to recover. I'm pretty sure there's stimulus packages and money being printed in Europe. In Asia and other parts of the world, other continents. So, there is going to be an inflation in currency. And then we're already seeing this, the speculation of cryptocurrency being the new currency, or I don't know, not to say the new currency, but something that we can actually use in everyday activity. I've already seen ads and credit cards that allows you to transfer your cryptocurrency. Like if you have a cryptocurrency fiat, you can transfer it over into the credit card and buy things with crypto.
Yeah,
I've seen ads on that from on YouTube already, YouTube and Instagram.
Yeah.
So, but of course that could possibly affect the market. So yeah, you're right. It's going to be rocky. I just have to figure out.
I think other parts of the world it'll be better, but yeah. Everyone's obviously looking at the U.S. and want to know what's going on here. I think it'll be kind of rocky here. Europe for sure.
Yeah. Leader of the free world, huh?
Sure.
Are we really the leaders of the free world?
But, And
is the world free? No.
Yeah, you have to take a look at demographics, and economic activity. So when you have a country, and, a lot of developed nations are old countries with very little birth rates. And not a lot of room to grow. In fact, a lot of room to lose, not a lot of room to grow.
Yeah.
When you've reached a ceiling, the only way to go, what do they say? The only way from the top is down, or when you're at the top, the only direction is down. It's true. But in this global economic crisis, if other countries are paying a lot of money, someone's got to be making the money.
Oh, always.
Like that's how it works, right?
Always.
So I'm wondering if this is going to be a chance for when I say other countries, I just politically mean China, because I don't think you can just say China without getting a lot of backlash.
And the sad thing about that is I feel like the people that's making the money is such a niche, small population. Yeah, it always has been. That's why this podcast is so important. It's just people really have to understand finances. People have to understand capitalism and why things are the way they are. Not saying that this is a good thing. I'm not saying that investing is going to heal all your wounds and take people out of poverty. But, at least if you understand it, then as an activist, you could appropriately combat it,
Yeah, I don't know, man. I mean, I know there's activist investors, and, I think it's important and I try to live a good life and treat people fairly and respectfully. But I don't know. I'm not looking for these answers in investing, in bank institutions, financial institutions, the ones who have traditionally robbed people.
Yeah.
I'm not looking, I'm not looking to them as saviors,
No, that's true, man.
I guess playing in this game because I want what they want, money.
Well, for me, and
I'm not expecting, morality from these people.
Yeah. Well, I mean, for me, it's just more because, being a minority in this country.
Yeah. You do need money.
Well, not even that. It's just, you probably familiar with this, but that word disproportionate is just so thrown around so loosely. And I hear it predominantly within African Americans and in our group, especially when it comes to wealth, disproportionate wealth in this. And I think I might have told you before, but the book that I read, The Cost of Being African American, and it just talked about in Playbook the stark difference that obviously, white people had a head start. Yeah. But then part of that is like the programming, we're programmed to work hard, get a high paid salary, and then we're able to buy a home and do that. Like we have to work hard for the money, where adversely, you work smart. And I feel like working smart is only taught to the affluent people, and working smart is the investing part. Not even really in the stock market, but like, getting trading cards and just keeping it for years, buy a bunch of trading cards when you're 5 years old.
I have trading cards still too for that. I don't know if that really was a good investment though.
No, this is just examples.
Oh yeah.
But just starting off young and early. Yeah. Like fuck getting a job at 14 and just learning how to work all the time and save your money. But start early, get the job at 14, but don't even spend it. Like don't work to buy the house. Yeah. Work to have the money and invest it in some way. Not necessarily the stock market, but just invest it so you can start to build wealth. And we have to really start to see wealth as a legacy, as a portion of your legacy in your life. Like, money is meant to be spent, but you have to think, what foundation can you leave to the next generation? And obviously, white people have been the pinnacle and an example from that.
I mean, they have the least amount of challenges to accumulate that wealth for sure.
Exactly.
In North America, in Europe. Yeah. And then wherever they colonized, I guess. But that's true. There's a lot of challenges that people have to, but this investment is not an answer, in my opinion. It's a luxury, like you said. Like it's something that you should be prepared to lose, and I don't know. Yeah, you're right. I agree with you. It's not the answer, but again, it's just having an understanding. Even if you do have a lot of money through investment, people will still treat you the same way, until they know you have that much money in investment. Like you're that's right. Not going to change anything. You're right. I mean, I'm not. Change will happen, but once again, I'm not looking to, all these bank institutions to change that. Man, like, come on. Yeah, no, you're right. I agree, but it's important that things do change. So I'm totally. Well, just being every aware. Way possible. It starts off with at least knowing. And I told you, me growing up, the stock market or any form of investing was never talked about. I was always taught to go to school and get a good job. And I won't even say that's minority talk. I just think that's the difference between, like you said, investing is a luxury. That's the difference of those that are privileged and those that are less fortunate. When you're less fortunate, you have less resources, unfortunately. So, so as long as you're aware, then the next step is figuring out how to offer these tools and these resources to people that are less fortunate, so they can start to, build their utopia and set a foundation for themselves. Yeah. But no, you're absolutely right. This is not the answer. It's not the answer. But and I totally agree with you. I think people should have the opportunity. There's no reason why you should not have the opportunity. You may be good at it. Like, I mean, I don't think it'd be horrible to take that opportunity away for someone who wants to do it or is good at it, So the opportunity, I agree, and I think it has happened more because, online brokerage firms and now on, Robinhood and all that kind of stuff. So it's happening that way, which I'm happy. Yeah. Yeah. Yeah, but it's the money part too. And once again, it's none of the banks that did that. It's all these little guys who are, they want money too, but at least the way they approach it is a little different. Yeah, but I don't know. I feel a little funny because they'd rather try to pick the money out of your pocket, Yeah, it's a little bit of exploit. You dropping into ATM. Yeah, I agree. Yeah, but I think we're almost at an hour, dude. Our episodes are getting longer and longer.
I think this is a good stop.
Yeah, I'm sure we'll have another episode of the next downturn that happens, which, I'm going to throw this out, long shot, but, if it comes true, all the better. I'm going to say 2021? I'm going to say 2027, 28 is the next economic downturn.
Okay. Good that you have a prediction. I'm not throwing anything out there.
I always feel like if you're going to get in, stock trading is all about predictions. So get practicing.
No,
even if
sure.
You're wrong, just
my situation, dude, I want to remain optimistic. So I don't want to predict another downturn. But I do believe it's going to happen.
They're normal though.
Yeah. I just want to get out. Right, like as soon as I can.
You just want to get out into the gold bars.
Yeah, I need a price correction for myself. I need my own self price correction.
Oh man, I hear you. Just give me the billion. I'll settle for 1 billion. Just that's all right. And I'll tax it. If you want.
No, for sure. Yeah, but I think this is a good episode. Yeah, I mean, hell, we talked about a lot. I feel like we could dive a lot deeper too. But again, we're not certified. We're not experts. This is just for entertainment purposes. But yeah, I mean, it's a lot to analyze. But as I said prior, that this is an opportunity to learn more of the market. So, for those that actually are investing and you're going through what we're going through with this downturn, again, the weak are going to perish and the strong is going to survive. So if you're strong, you're going to pull, figure out strategies, get more historical context, being in this situation and remain optimistic, even though, you're losing a couple thousand or a couple million or whatever.
Well, I mean, I would say be prepared, even if you don't do it. Don't be greedy and get ready to act. Get ready to jump.
No, definitely never be greedy. But this is episode 7 of the Hustle, the Struggle Investment Podcast. And remember, we have our YouTube page, we have our Instagram and our Twitter. Some of the handles are different. So I'll just say, if you want to find us, go into the search bar and type in the Hustle, the Struggle Investment Podcast, and we should pull up. Or you can just type the Hustle, the Struggle. And make sure you type in the Hustle, the Struggle, not the Hustle and Struggle. Just a couple of SEOs and stuff that I was figuring out, researching.
Oh, I just wondering if I can't think of any porn sites or things that land.
No, you just have to be specific. But besides that, please support us. Follow us on all social handles. Subscribe to our YouTube page. And then we are using Anchor. And we definitely need subscriptions. We're not monetizing off this content as of right now. We're trying to figure that out, build basis. But we just love the support. And as Dave had mentioned in the episode, we would love for you guys to comment, post. And we actually have an email. We haven't said the email yet, but our email is thehustlethestruggle@gmail.com. You can email us at thehustlethestruggle@gmail.com. But this is your host, Herb, and then frequent guest, David.
Hey.
Had a great time. Thank you guys for listening, and tune into the next one.
Yeah, tell all your friends.
Peace. Thank you, everyone who's here listening. For a disclaimer, we are not professionals nor certified stockbrokers. We do sell, buy, and trade stocks, but at our own discretion. The content that we talk about is based on our own opinion, not fact, and the content is for entertainment purposes only. Remember, what you invest is at your own risk. If you know nothing about stock investing, we highly suggest you seek professional help.